Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors seem to have down-weighted the China risks. Equity markets are buying the idea that the coronavirus impacts will be short and shallow. European markets were up 0.9% overnight, and so far today Wall Street is also higher, with the S&P 500 up 0.6% in midday trade. Yesterday, Shanghai and Hong Kong rose 0.9% and Tokyo rose 0.8%. More locally, the ASX 200 was up 0.5% and the NZX Capital Index was up a similar amount. Much of the analysis around the longer-term impacts, however, is circular. Certainly the RBNZ yesterday accepted the sanguine view, relying on whole-of-government analysis that the Chinese bounce back will be strong when it comes, making up for short-term pain. And equity investors just assume central banks will bail out any downside market risk. But the actual data out overnight suggests that even prior to the February onset of the coronavirus implications, there was a sharpening downturn underway, one that the latest emergency will only intensify. Production logjams and lower commodity prices are spreading worldwide. In the US, Boeing is now saying it won't be back into full normal production on the 737 MAX for another 2 years. That alone will crimp American manufacturing. And Japanese machine tool orders fell almost 36% year-on-year in January as car makers held off ordering. That drop is similar to the year-on-year fall reported in December. And Malaysia released its fourth quarter GDP data yesterday, showing that growth had slipped sharply to a 10-year low of just 3.6%. And the EU industrial production took an unexpectedly large tumble in December, down 4.1% year-on-year, when less than half that drop was expected. That takes it back to levels last seen in 2016. And the reporting of new cases of COVID-19 and the number of deaths seems to be slowing. At 45,200 officially confirmed cases, that is now less than a doubling in a week. But the new death count of 1,118 is still more than double the 492 level a week ago. Chinese housing sales have virtually dried up. Chinese travel has virtually halved. And in Australia, giant Aussie insurer IAG, the dominant general insurer in New Zealand as well, has seen its profits halve, mainly because of exceptionally harsh risks in Australia. To recover, premiums could face upward pressure as a result. And they are warning that they won't insure more risks exposed by the changing climate. US Treasury 10-year yield is just on 1.63%, and another 4 basis points rise from this time yesterday. Gold has risen today, up $5 to $1,570 an ounce. And US oil prices have made another small gain today, now on just $51 a barrel, while the Brent benchmark is also high at $56 a barrel. But both are still at low levels. And the Kiwi dollar will start today firmer at 64.7 US cents. On the cross rates, we're also firm at 95.9 Australian cents, and against the euro, we're up to 59.4 euro cents. That raises our trade-weighted index to 70.5 and a 1.1% rise in a day. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.